Pradeep Chandani is with us. Pradeep, surprised by the move today?
Yeah, definitely so. I mean, a magnitude of move is definitely surprising. 7600, we were expecting that to act as a support. Nifty, after dipping slightly below that for 2 days, has bounced back from that support area. But definitely the magnitude of the up move is clearly surprising.
Right. What will be the next level now? Say if we close around these levels?
See, Pankaj, from the low made on budget day, Nifty is up around 12.5% and Bank Nifty is up around 20%. Now, after this heady up move, Nifty and Bank Nifty both are running into very stiff resistance areas that are placed on their weekly charts. 34-week moving average, which we track very closely, is placed around 77.70. And from there, above that, you have 200 DMA at 7900. Now 7900 is also where the highest high, that is 91.19, and from there 86.54 is the next top made on monthly charts. So if you connect both these tops, then 7900 is the area where that trend line will kick in. So I think this area 77, 72, 7900 is a very stiff resistance area. Similarly for Bank Nifty, I think 16,400 to 16,800 is the area where these resistances are placed. So I think this is the area where we would like to lighten trading bets and book profits, because I think after testing this resistance area, the moving averages, the benchmark will try to catch up the moving averages, will retrace a bit, and from there it can move again. But I think this is the area, that 77, 72, 7900 is the area which can act as a potential resistance area.
Right, but till that, you believe the rally would be as fast as it has been so far?
I think rally has been very steep, as I mentioned. So I think now it's the time that after hitting this resistance area, Nifty will try to correct a bit, try to consolidate a bit. So April, I think, would be at least first half would be marked by consolidation, and then we can take on from there. 34-day moving average, which is currently placed around 73.50. So it's a moving average. So obviously, as the day passes, it will move up. So I think 7400 is the area where Nifty, after hitting a resistance area of 77, 72, 7900, can retrace and touch this 34 DMA. So I think after this expiry, we might see a consolidation phase of around 10 to 12 trading sessions.
Right, but again, after that, you feel that markets can go up quite significantly, or it'll be tough to say now?
Looking at major charts, I mean, after February, we carried out a study where we studied two major corrections of last 8 to 10 years. First was the major correction of 2008, when Nifty tanked from 6300 to 2200, and then 2010. Where Nifty found a bottom at 4500. So on both these occasions, we found that the final bottom was formed in the month where Nifty closed below the lower band of Bollinger on monthly charts. So in February this year also same formation got replicated. So we came out with a special report on 1st of March that will history repeat itself, because this is the formation, the formation in February month was exactly the same as we saw in October 2008 and December 2010, where major bottoms were formed. So from this, I think we have seen the worst. The bottoms made in February are the worst levels we have seen. So now, after a steep run up, our base case scenario is that after as Nifty is very near to very crucial resistance areas, it will try to consolidate around these levels for quite some time, and after then there are very good chances that it will take out these resistance areas, and that will mark a clear breakout on weekly charts, that this is what we are seeing from the bottom of February is just a pullback rally, because we were quite oversold, but resumption of up move will happen after Nifty crosses 200 DMA sustainably. So that will happen after a couple of days or weeks of consolidation, but clearly we have seen the worst. That is what we feel.
Any view on Tata Motors 390 right now?
See, Tata Motor, if you remember, we continuously held view that it needs to retest the previous bottom, or maybe go slightly below that to form a durable bottom. That condition was satisfied in the month of February, when it touched a low of 265, and there it made a positive divergence on monthly charts also. So I think it has satisfied all the conditions of a durable bottom. Now the crucial resistance level to watch is 430. That is the high it made on November 2015. So I think that is the major resistance area where it needs to take out for beginning a fresh up move. But clearly I think worst is over for Tata Motors, and if any dip comes in the Tata Motors stock, that should be used as a buying opportunity for investors. Here in this space, TVS Motor has been our preferred pick, and that continues to be so. And Ashok Leyland is one which also that is another stock which we have been liking. So these two are our preferred picks in auto pack.
Right. So as far as TVS is concerned, I remember talking to you about it at 270, 260, and you said that it's in a long-term bull market. Now with this making a new high, it continues to look good. What could be the targets on upside, say in the next 6 months or so?
So in the correction which we saw from 91-19, very few stocks managed to hold on to their 200 DMA, and TVS Motor was one of them. Now it has taken out its 295, 285, 290 resistance, and from there it has been on a fresh up move. Now it's very near to its highest high made in January 2015, that is 322. So that it needs to take out decisively. Today it made a new fresh 52-week high, and it's hovering around that earlier high. So I think once this is taken out, then another 10-15% kind of up move can easily be seen over next couple of months. So we continue to be bullish on TVS Motor, mainly because oscillators on daily, weekly as well as monthly charts are still pointing to a strong up move. So clearly we will use any retracement in TVS Motor as a buying opportunity.
Right. Pradeep, any view on ICICI Bank, 6.5% higher? It cannot only be short covering.
ICICI Bank, among the private sector bank, this was the worst performer in the sense that it saw the maximum correction among private sector banks. Now after this correction, it found a support around its major trend line, which if you connect the bottoms made in 2011 and then 2013, that trend line support was coming around 195, 190 region. So that is where it found a support. So in a sense, it has completed its major correction and found support around major support areas. Now after this heady run up of over a month or so, the stock is running into stiff resistance that is placed around its 34-week moving average, which comes around 250. So that will be the testing place. If that is taken out, then we can say that the stock has the relative strength. But this run up what we have seen over past 1 month or so should be termed as a pullback rally, and I think 250 is the resistance area to watch out.
Right. Any view as far as Tata Steel is concerned? 324, 325, very strong move, very strong gains for that name.
See, along with Tata Steel, I would like to make a comment on Nifty Metal Index itself. After a underperformance of more than 1.5 years, Nifty Metal Index made a positive divergence on its monthly charts, and I think I shared this observation last time also, that I think the worst is over for Metal Index, and this is one of the very few indices which is trading above Nifty Metal. It is one of the very few indices which is trading above its 200 DMA. So I think going forward, Metal is the pack which can outperform significantly. We have held positive view on JSW Steel for quite some time. From the levels of 1000, we are working with a target of 1370. It's on track to achieve those targets. Apart from that, I mean, second in the packing order will be Tata Steel. Here I think there are levels of around 350 clearly visible. That is where its 34-month moving average is placed, and once that is taken on, then we can talk about higher levels. But clearly I think metal as a pack is set to outperform over next 6-8 months, 1 year.
Pradeep, any view on Adani Ports, 5% higher today after a long time, going back to the levels of 250?
See, first of all, it took a support around its previous tops made in previous years, that is 2010 and 2013. That's where it made a top of 175. So logically, previous tops should act as a support in major fall. So that's what it did, and it took support around those levels. Now this run up is now running into will run into resistance around 270. That's where its 34-week moving average is placed. On daily charts, it's in a buy mode. So I think this up move can extend to around 270, closer to 270, where it will face major resistance.
Right. Would you buy into other Adani Group stocks? Adani Power was also up 10. I think some of the other Adani stocks were also buzzing.
I think Adani Power looks interesting. After a consolidation of say 1.5 months, it has taken out its previous top on daily charts. So it has established a higher top, higher bottom formation. So I think an up move towards 35, which is the top made in January, it's clearly visible. And once that is taken out, then we can talk about higher levels. But clearly, this looks an interesting bet from short-term perspective.
Right. Most of the Adani names are looking good from a short-term view.
Yeah, and also I think Adani Enterprise chart is also in front of me. That is where also a breakout is clearly visible on daily charts. So I think all the Adani Group stocks, as you mentioned, are looking good from short-term perspective.
Right. How would you look at oil marketing companies? BPCL, refusing to take a new high, but at the same time, it's not falling. You think it's a consolidation, which will lead to a breakout?
See, my view on oil is that oil has made from bottom around $26 per barrel, and we had also come out with a report on oil around 33 per barrel, that the oil is headed towards $41 per barrel, and then once that resistance area is taken out, then we can see 47 and then 55, 60 kind of levels in next 1 year or so. So in that case, that scenario, I think oil marketing companies, our view would be slightly cautious. Now, because BPCL was able to pass on the petrol price hike, that's after that day we have seen significant up move in both, these three oil marketing companies. But if we take view on crude oil, then I would tend to avoid BPCL, HPCL. Yes, but if this phenomena can continue, if they are able to pass on the hike in oil prices, then they can continue to run up. But from technical standpoint, I would rather prefer Cain and ONGC, because my underlying view on oil is bullish from here on.
What would be your target for Cain or ONGC?
Yeah. Cain has shown a remarkable strength, and now it is above its 200 DMA. On the weekly chart, it has got a resistance around 172. That is very crucial resistance area. Once that is taken out, then we can talk about higher levels, which will take it to around 200 kind of levels. So clearly 172 is the nearest target, above which 200 will be the next major target. Now ONGC, if you remember, had a very strong support around 220 kind of levels. So that will act as a immediate resistance going forward. Once that is taken out, then we can talk about higher levels of around 244, where its 200 DMA is placed. So ONGC, I think 220, 225 is the resistance area, above which 245 to 250 will be next target zone.
Right. How would you look at something like a HDFC? Generally, it's the market leader. It takes the market, whenever it's going up, it takes the market higher. This time around, you think it's looking different? It may underperform now if the markets were to go up from here on as well?
Pankaj, I just missed the name of the stock.
HDFC.
Sorry, I missed it.
HDFC.
HDFC. Yeah. So I think this is one stock in housing finance space which has underperformed in last couple of months. In this space, our preferred bets are LIC Housing and GIC Housing. Nevertheless, HDFC has also completed its major correction. Now, if you see the last couple of months, in correction of last January and February, it has tested its 34-month moving average, which is placed around 1010, 1020. So I think the stock is more of a case of a consolidation, and unless it breaks its low made in February, that is 1010. I think there are long-term investors can nibble into this stock, but I think as I mentioned, preferred bets here are LIC Housing and GIC Housing.
Right. LIC Housing Finance, how are you looking at that name?
I think LIC Housing is a stock where it is trying to retest its previous top made in January, which is 515. Currently it's at 486, so that 516 is the major target as well as resistance area. Once that is taken out, then I think very strong up move will happen, and which can take it to around 575, 580 kind of region. Also, it has reclaimed its 200 DMA and it sustained very well over past 2-3 weeks. So I think that 200 DMA, which is placed around 460 kind of area, which will now act as a support area. So I think LIC Housing remains the preferred bet in housing finance space.
Right. Pradeep, thank you so much for taking out time for us. Always a pleasure.